Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, July the 12th, year 2021. Let's talk trading. Line in the sand. A reminder, these videos are for educational purposes only. Your results may differ from mine. Line in the sand. What the heck am I talking about? Well, when you draw a line in the sand, the waves can come away or come up on shore and wash that line away, right? So, but we also mean you draw a line in the sand because you're saying, hey, if you cross this line, something's going to happen. And usually it's not a result that the person crossing the line um, is going to want to have happen. So, anyway, those of you who have been watching my videos know I'm big on horizontal lines on the chart. So I thought maybe this week we'll just get back to talking about horizontal lines and why I like to use horizontal lines and what they mean, why I put them where I put them, etc. So I'm going to start out with a chart that has some of the zones that I guess I'm quote unquote famous for. Rat zone, wick zone, and I'm not sure if this one actually has the buy zone on it or not. I don't think it does, but we'll talk about the buy zone. In fact, we'll probably talk about that first. So since I said that, let's just go to a buy zone chart. What's a buy zone? And where did it come from? To me, the buy zone is the distance from the open, the daily open or weekly open or monthly open, that if price goes to this point, chances are it's going to go beyond that point based on statistics. So, for example, when I was trading stocks, and that's where I invented the buy zone, I was looking at the charts, and it's like, if you buy at or near the daily open, at near the daily open price, and sometime near the open, chances are the high is going to be higher and the low is going to be lower than the daily open. So, for example, right here, this H1 bar right here, this was the start of the day, and it opened at 88.99, 1.388.99 right here. Now, based on what I just said, chances are the low is going to be lower than the open and the high is going to be higher. And so you can see the low of the day is definitely lower and the high of the day is definitely higher. So far so good, right? So hopefully you're with me. Now, you can see here I have the buy zone set at open +8, open +10, and also open -8, open -10. I called it the buy zone mainly because in stocks I was buying, and at the time I didn't short. I was always long, always buying long. It wasn't until later that I started shorting. But and so I called it the buy zone, where if I could rename it, I would call it the maybe the open trade zone or something like that, the OTZ. But it's the buy zone. So as you can see, prices in the buy zone once again, right here. Actually, you call it the sell zone, the short zone. And we know, based on statistics, that for the pound dollar, if it goes +8 to +10, it's going to go higher. And as you can see, it did go higher. And if it goes open -8, open -10, it's going to go lower. And as you can see, it went lower. I mean, statistics play out like that day after day. But right here, what happened? It went into the sell zone. So if you would have sold, then if you would have put your stop either at the other side of the open or in the buy zone, you would have been stopped out. And then if this was your first trade, you might go, oh, that thing doesn't work. Only to see it work and work well. So, line in the sand. The open plus or minus a certain amount. Those are lines in the sand. And you can do this every day. Now, what I noticed recently was for some reason the pound during the New York session likes to return to the open. And then things happen. So here, rather than wait for it to cross, you got a green candle. You can just take it cross in the open. And you could have picked up 10 or more pips. And here you got a red candle at the open, H1. You could have picked up 10 or more pips in 2 hours. Line in the sand. Real simple stuff. Of course, the trade could go against you, and that's why we do what? Boys and girls and non-binary traders, we have our risk management in place. Because when we place a trade, we don't know if it's going to be a winner or loser. We all want our trades to be winners, but we know there's a possibility that it could be a loser. And since we know there's a possibility it could be a loser, we only want to lose or risk so much on any given trade right here. And with the buy zone, when I first did the buy zone, people would always ask me what the stop loss is. And I go, what do you mean? What's the stop loss? Because to me, it was just so obvious. If you take a sell trade here and then all of a sudden price winds up here, the system's telling you need to be long. So why do I need to tell you what the stop is? It's like you want to be long above the open and short below it. I mean, to me, it was just simple. But as I said in yesterday's video, I have to find the combination of words that click for someone else in order to communicate, in order to teach, in order to convince. And so, that's what I'm going to start working on is finding those combinations of words. So in this case, some people go, you're asking to be spoon fed or have, somebody to hold your hand. No, what they're really asking for is clarity. Tell me what to do, when to do it. Under what terms and conditions do I do it? That's what they're really asking. But some people, say, well, you got to learn, price action or something. And they never define the term. It's like, why do they make it a mystery? Probably because they don't have the combination of words to communicate it. Because as Deming says, you can't explain what you're doing as a process, then you don't know what you're doing. I mean, it's just so simple. I mean, now think about that combination of words. If you can't explain what you're doing as a process, then you don't know what you're doing. Because when you think about it, what is knowledge? I know I'm kind of getting away from trading, but if you think about it, knowledge is really words in your brain. Because almost everything you do, you attach words to it. That's how you were taught. You can watch something and then you do it, but usually you attach words. Or you have pictures. But in other words, you have some symbolic representation in your brain so you can duplicate that in the real world, in the physical world. And so now, if you would have taken this trade here, it's kind of just meandering. It could be a winner, it could be a loser. What's it going to be? I don't know. So since I don't know, I say, well, if it comes up here and closes above this level, then maybe it's telling me to exit the trade. And then if it comes down, it maybe gives me 4 or 5, 6 pips and doesn't break this level and starts to crawl back up, maybe I exit the trade for a small win. Or maybe I wait it out. I have to make those decisions in the moment because it could be moving fast. If it's moving really quickly, I might not get out. I might let it keep going until it stops. Then if it starts to reverse, I might punch out. But the point is that I drew these lines in the sand. Why did I say line in the sand? Because tomorrow these lines might be at a different position. Not the weekly open, but the daily will be, most likely. So, but once that line's drawn for the day, it's good for 24 hours. And for the week, it's good for the week. And for the month, it's good for the month. But then when you get a new period, either a new day, week, or month, then you redraw the lines. That's why I say lines in the sand. And once again, it's based on statistics. Now, I know on some charts you might see that these is plus or minus 5, and they're valid. And you can use plus or minus 5. You can use plus or minus 2 if you want. The only problem is a lot of time people say, well, you'll get whipsawed. You'll go short and you get stopped. You go long, you get stopped. Doesn't usually happen like that because you can see right here, because of where I drew the line, you wouldn't have even entered for this time period. Now you would have gone short there. Price could have gone against you. And if you let the hour close, you can see it didn't close above that line. Then you let this one happen and it fell back below, and you can see there was profit to be made or profit to be taken. Because remember, trading is speculation. You're guessing, you're betting that the direction that you pick in the instrument you trade is going to move in that direction. But you don't have a guarantee. And that's why we use stop losses. And why do we draw the line here? Because that's where it opened. And why do we put the lines here? Because statistically, based on the frequency distribution of the wicks, in other words, high minus the close, or in this case, high minus the open and open minus the low, high minus, we don't have it displayed here, but on some of the other charts I do. In fact, I think I put it up on another chart here. I brought out so if we switch over to the hour, let's see, for this particular hour, you can see high minus open and close minus open. Then if we switch to the daily time frame, this is an old version because it didn't put out the time frame. You can see here, a high minus open 19.6, open minus low 51.3, and both of those numbers are greater than 10. So you can see there is a chance to take pips. So, fellow traders, I hope that helps you. I hope maybe that clears things up. Let me know, because maybe I need to work on finding the right combinations of words for you. So just remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.